Alright traders, I want to go over a trade I made, I think it was Wednesday morning, and traded it through to Thursday in the 10-year note. And this is my favorite market, and we're going to get into that here in just a minute. But first I have to do some housekeeping to keep everything up and up here on it. Please read this disclaimer. If you don't have time to read the disclaimer, it is also in the description under the video. You can read it there as well, or stop the video. Know that trading futures, options on futures, foreign currency, stocks, or options on stocks involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Know that I'm only going to be going over one or two aspects of trading here in this video, and by far I'm not covering everything necessary you need to know to trade real money in one video. This is strictly for educational purposes only, and I think that, assume all trades are Sims. And alright, we're going to be looking at the 10-year note. You could also, it's tick value, or the minimum move it can move. Every time it moves up a price level or down a price tick, ticks up or down, it either gives you $15.63 or takes $15.63 away plus your commission. So it's $15.63 a tick. You could also trade pretty much the same thing here is a 5-year note, and it trades at $7.81 a tick. All right, let's escape from that. I have the monthly up here right now, but this is where everything is currently at. And you'll note here that price, I have these lines drawn ahead of time off these swing highs. This was a monthly swing high, and I was watching for price to move up toward that monthly swing high. I also watched to see how well a job it's doing by watching the momentum indicator. I look at the weekly, and I determined, how well a job is it doing getting up on the weekly as well. Then I'll go to a regular daily and look at it. Then I go to a special daily that I have made up, and I have the price of the monthly swing high marked off here with the red horizontal line, and where price was piercing it. And I was watching momentum to see how well a job had done. This is an area where I would look to take a trade. All right, that said, I'm going to bring up, before I go any further, let me talk a little more about the 10-year note and why I like it so well, and then I'll move on with the trade. I like it because it has a tremendous amount of volume. Over 1.5 million contracts traded so far this morning on Thursday the 8th, and it's just about 25 minutes till 2, and we've already had that many contracts traded. And the ZF has already traded almost 800,000, or a little over 800,000 contracts, which is the 5-year note. All right. It also has liquidity. Now, I have a video in my video collection. If YouTube got rid of a bunch of my videos the other day, so I had a problem with my videos. But if it's still in there, I have a video on it explains how the market auctions and everything. But these are limit orders on either side of the market here. There's over 1,000, 4 digits right here. In crude oil, you see 2 to 3 digits usually. With this one, you'll see usually 3 to 4 digits on this, and they'll sometimes go up 5,000 contracts or so. But right now, this is about average. Well, you see 41 there, but you usually see 4 digits. So right now, to move price down, it's going to take 1,224 contracts. Somebody's going to have to move in and sell to this person 1,224 contracts he's wanting to buy. He's put up 1,224 contracts, or maybe a whole bunch of people, but maybe one person. It could be 10, 20, one person. I don't know. But anyway, there's 1,224 contracts waiting to be bought there. To move price down, somebody's got to come in and buy all those contracts to move it down one tick, or sell into those contracts. And then this person over here has got to buy about 450, 425 contracts, well now 1,000 contracts, before he can move price up. So this market is very liquid. You very rarely see slippage in relation to crude oil, ES, and so forth because of the thickness of this. Now, this is if you're trading one contract, 100 contracts, something like that. You see very little slippage, any between 1 and 100. Once you start moving up, in several hundred contracts, then I have to show you other things, which most people don't need to know that right now. Anyway, let's look at the trade now I made. Let me get my pictures up here. Let me pause and bring them. Okay, the day that I was getting in the trade, the 7th. Now again, these are pictures I got here. This is the 8th right now. I can move this one. I can't move this one. So this was yesterday from my point of view at this point in time, because the day's the 8th. I got in this trade a little after 10 o'clock, and when I took the snapshot after that, and I was looking to take a trade. If price went up and tested that monthly swing high right there, I was watching to see how strong momentum was. All right, let me move to another chart. All right, this is also the same daily, just a little smaller here and stuff, and it shows where I got in and where I was aiming. Now, the reason I had my price target down here was this is where price held up before on the daily. This is where I would suspect price to move back down to if we get a good move back down off of this this signal here that I've got. All right, here's where I got in the trade at. You know, you can't do a video unless you on these. I mean, like live video, because it took 48 hours, 24 hours or so to taped all this. So I took snapshots. You can see here where I got in. My stop is 6 ticks above the swing high I just made here on this swing high. And I was looking, I got confirmation to get in this trade. Now, I use this chart in combination with several other charts to determine whether I want to get in here or not. But this is basically my confirmation chart. All right, this is the 8th, this is the next day, and this is where I got out at right here. Now, you know, I should have probably got out a little bit sooner here, but I wanted to think about it here a minute and stuff. And I was almost sure this thing was going to continue on down, and it did about 2 hours after I got out of the trade. Then it continued to move on down. But at any rate, I had reasons why I thought that it would at least hold up here, and it did hold up in this area, but it didn't. Then it continued lower. Okay, here's a shot of some range charts that I use, and I'd marked off some areas where I thought price would hold up as price moved down in it, and you can see here where I got in, and you can see here where I got out. Now, this trade was just a little over $1,000, and you can see the volume that was occurring at that point in time right there. I keep very detailed things of all my. Okay, now for the students, I'll be making a this video is rather short, less than probably 10 minutes, but I'll be making a very detailed video of the different tactics I used, or I only use. This is just one tactic here, but I'll probably go over 3 different tactics I could have used to get in this market. But this is the initial what I got in here. I don't have it fixed right because I had I copied this this little template here, and then I'll fill in the numbers, and I messed up, and I don't have the right number right here. I have a Crude number. But anyway, I risked 6 ticks. It was $93.78 risk per contract. So just a little under $100 a contract, not counting commissions. Entry, it was there when I entered it and everything. I keep detailed records of what I've done, how long I was in the trade. The number of ticks gained was 66. Now, the beauty of my trading plan is up here, the risk-to-reward ratio, 11 to 1. And I should have got better than that, but I went ahead and got out early so I could get this video done. And this is for demonstration purposes only. But 11 to 1, that means I have to have 11 trades in a row, not counting commissions. 11 trades in a row go bad before I go back to break even now. That's what I like about it. This just keeps me plumb out of trouble. And as you can see here, I did some calculations here that I'm going to go over with the students. But the risk-reward ratio on this thing, if I took every signal that there was within a certain time parameter, I'd only been right 50% of the time. And it would have generated $3,405 in profits because I keep my risk low. I had 6 winners and 6 losses overall the whole period here. Doing a tactic that I teach in this, where you don't have to think about it. You just enter the market when you see the signal. All right, and I think that about covers what I did with this trade. Again, the students go over to the thing and look for this picture in the students' the videos that I did of trades. And look for this on this, and I'll put this on the front of the cover of the thing so you'll know which one I'm talking about. Trade well out there.